Madhu Kela in conversation with Nikunj Dalmia on what he makes of, well, firstly, the biggest scare being that of long-term capital gain taxation making its way into Budget 2018 and even on the headwinds on the fiscal front.
I think NBFC, private sector banks, so that is possible. But no bank will make money over the next 4 years? Everything will come down. No NBFC will make money in the 4 years because there is a euphoria. I don't think that is right. So there are selective companies which have done a fantastic job of basically making sure that the balance sheet is strong, their business model is strong. I think their return will be there. It will certainly not be, in my view, what happened in last 4 years, because last 4 years was a dream run for a lot of these companies. In my view, NCLT is one of the biggest reform which I have seen, because for the first time there is going to be change in promoter. For the first time, clean assets are being offered to people who never participated as industrialists. So there is no encumbrance of the past. Third, it is happening very transparently that anyone can bid. So now all these stressed assets, so there will be a haircut of maybe 60, 70, 80% in some cases where the actual fraud is being committed. But a lot of cases, banks will end up recovering more.
So cycle, according to you, could change, and also the business environment is changing.
Exactly.
So it's like a twin advantage for some of the private.
Exactly,
banks.
and plus it's so difficult to do capex now in India. So difficult to acquire land, so difficult to get environmental approvals, so difficult to put actual physical capex. That is, the Binani cement deal is actual validation of what I am telling you.
Are markets prepared for any change in the LTG regime?
No. To be honest with you, no. I don't think मार्केट को यही लगता है कि 3 साल से बोल रहे हैं, इस बार भी बोल रहे हैं, तो कुछ होने वाला नहीं है. I do not think market in that sense is ready for any introduction of any taxation. So 3 things we have to watch. What do they do in the short-term capital gains? So if they increase that to business income, I think there will be a knee-jerk reaction in the market. If actual long-term capital gains comes, by percentage, or the period gets extended from 1 to 3 years, I think market may digest 1 to 2 years. But if it goes to 1 to 3 years, then third, I would watch very carefully what do they do to all this dividend distribution tax, or is there any tinkering which happens in buyback? Let's say if the promoters who are offering shares in buyback, can there be any taxation, or long-term capital gain can be put up after a threshold. So you say up till 10 lakh, 20 lakh rupees for general janta, it is tax free, but after that it is taxable. However, I feel government will not disturb the apple cart of the market, because they need this market more than any one of us, because they have to do divestment. Divestment is going to be a big number in this budget, and I would say that they are also seeing a lot of companies are able to raise money which will result into capex cycle starting.